Hello everybody, welcome to your Tuesday edition of the TraderMerlin Show. A bloodbath out there. This is the Halloween edition, apparently, with all the red that's on the screen in the markets today. Unless you're trading something like the dollar or the VIX that's going the opposite direction of these markets, you probably lost some money on the south side. Good afternoon. Today's show will be a little bit about commentary that was made recently from Janet Yellen, and I thought it's worth visiting. Of course, you guys might have seen the graphic out here where I put some horns on Janet Yellen, and it's not because she's evil in any way. It's just the industry is actually looking to make her out to be evil. And yes, Pepe was supposed to be 2:15, but I finished my presentation early, and I wanted to get things back on track, so we started at 2 o'clock today. So she's actually got a very tough job. I actually think she's been doing a great job, but her comments today might have made a lot of people out there kind of freak out, and she doubled down on it again. Remember, she said this at the Jackson Hole Symposium as well. She pretty much said the exact same thing, but bottom line was it created a lot of fear out in the marketplace. And if you guys follow me on Twitter, I actually put a Twitter poll out there and you guys feel free to go to TraderMerlin on Twitter and fill out that poll so I can get more numbers on that poll to see what the overall is. But really it says, look, I know I love playing with the graphics. Lisa, honestly, it's one of my favorite parts of doing the show is creating some funny, cool thumbnail graphic to start the show. I thought this is a pretty decent one, especially because that smug look on her face. She has this look like, you better raise that debt ceiling or we're going to default. Look at how angry she is. Is she wrong? My question was, in the Twitter poll, is the U.S. going to default on its debt this year? Something it's never done. Answer A is hell to the no. There's no way that's going to happen. Number 2 is maybe. And number 3 is absolutely. It's about time. Well, look, personally, I don't think that there is a chance in hell that the government would allow that to happen, because as soon as we default, I don't know, all our credibility goes out the window. Now, does that mean that we might be downgraded along the way? That could be and probably needs to happen given the amount of debt accumulation that we've had over the past 18 months. It's been pretty ugly. So the Great American Default, look, I don't think it's going to happen, but what would that do to us as a country? Certainly it would make the interest in the dollar disappear. And if we go and look at some charts here of the dollar index, which is up a little bit today, you can see that dollar has been strengthening and strengthening and strengthening. Loving the little double bottom. It's actually kind of an important point. We were breaching the highs we established back in August on the dollar index, making higher highs, higher lows. Really, once we get above this 94 mark, there's only one more stopping point before I think we get a real strong move up. And this means that people have confidence in the dollar. It means the dollar is gaining strength against other global currencies. Now, if we default, this dollar index will probably drop extremely quickly, very, very sharp. I mean, basically, it means we're not worth the money we're not worth the money that we are printed on, or something like that. But I think it paints a pretty ugly picture for the markets going forward. Look, defaulting on the debt might be a nice way to clean the plate for us, so to speak, because we have so much debt. But I just don't think that there's a chance of that happening. Now, of course, you'll kind of have to keep your eyes to what these politicians are saying and how things roll out. The debt ceiling vote, of course, is going to be on this Friday, which is one of the reasons why I held those put options. And I saw earlier people were asking me about the put options. Yeah, it was a great day for my puts. It was funny because I was thinking of adding some more to it. And I'm like, you know what? There's no need to go overboard. I've got plenty. Right now I've got 55 puts. I have 4. I had to write them down because I got them backwards. I thought I had 40 QQQ puts and 50 S&P. I actually have 40 SPY puts and only 15 QQQ. A little bit bummed about that because for some reason I thought I was heavier in the Nasdaq short. But all in all, yeah, it was a great day for puts. And I did a whole bunch of other trades today. I actually sold some puts just for the next 17 days on a couple of other items. I sold some Microsoft puts. The premium on Microsoft today was great, by the way. If you're looking at kind of shorter term, I'll show you the chart of MSFT. Basically, I got a little over 1% for 17 days on Microsoft selling these 260 puts. And look how far away that 260 is. You know, do I really think Let me just put some lines on the screen here. Do I really think that Microsoft is going to drop by 8.25% by October 15th? I personally don't. I don't think that's going to, I think that's way stretch of the imagination, but it certainly could happen. So anyway, I sold some of those puts. What else did I sell today? I sold some QQQ puts, but those were a little more concerning. Personally, I sold down here at the 350s. So just putting a little bit of capital to work in a 1% kind of strategy that I talked about a while back. So those are two of the additions. I also today, I know you guys have been asking, I sold some covered calls on silver just because it feels like it's just bouncing and chopping going sideways, but I plan on holding that silver anyway. So I actually sold the 2150s today on SLV, collected myself, a few $100 there. If it gets up above 2150, oh well, fine. I'll take my profit, make some money, and collect the premium. So all in all, those are the changes I made today. Didn't make any equity specific trades, just options was my main focus today. Nothing really noteworthy. So as you want to see the VIX, yeah, we saw a nice 23% move up in the VIX. And the interesting thing is, for those that don't know what the VIX is, it simply is a measurement of risk. They call it the fear gauge, and it measures the ratio of puts to calls. And basically, this big move up means a lot of people were buying puts today, which is why I got some great premiums selling Microsoft puts. I mean, most of the damage happened in the tech side of things today. And if you look at where the VIX is, it's at 23.24 right now. Now, on the grand scheme of things, 23 VIX really isn't that bad. I personally think it could be significantly higher than this. When I was first taught trading, they told me that if it was below 20, then that's a sign that you should be selling, and if it's above 40, that's a sign you should be buying. Well, we're at 25 right now, roughly 25. No big deal. I think that if we do start to see more panic here and a little bit more sell-off, we could get that spike much higher. And as Lori says, premium was great. Tell you what, if it keeps dropping, keep those powder kegs dry, because there might be some opportunities to collect on a lot more premium, or potentially, if you think it's going to bounce, buy some of the pullbacks here. But we've had some great moves out there in the equity market today. I'll start things off with crypto. Not the best day for crypto, to be sure. Again, it just feels like we can't get that momentum going right now. It's been this month of just weakness, lower highs and lower lows, so it's a short-term trend to the south side. Bitcoin today was down about 3.13%, making it the worst of our 7 markets I like to go over here. All in all, I'm still long-term bullish on Bitcoin. I think you all know that, but there's a very, very real possibility we end up down at $30,000 here just to kind of wash out the market, as there might be a little flight from the crypto markets to pay off some margin calls or to cover some losses that people may be incurring as this market starts to roll over. So Bitcoin and crypto, the worst, and there's a lot of red in the crypto space. Here's where I was excited today. Notice the way this Nasdaq closed. Here's your Nasdaq 100 futures. And we've had that yellow box. I drew that one months ago, and we are right near the bottom end of that range. It's the second time, or actually third time, we've been down in the bottom end of that range. And I was thinking to myself, I'm like, you know what? Maybe I should just dump those Nasdaq today. And remember, I told you guys 2 weeks ago, or was it 2 weeks ago? Last week when we came down to this level, I was like, I felt like I should close out my put position because the profit was so quick and so fast on that day. And I told you, my objective, I want to let September finish. I want to get past the debt ceiling vote, because my guess is we will not get an agreement on Friday. Just an assumption. We might not get an agreement on Friday, and we'll push it to next week, and that will stoke those fears of default, which Janet Yellen, I think she did the right thing. I just think she pointed out, says, if we don't raise that debt ceiling and we don't pay our debts, we'll go to default, and that's going to be catastrophic for our economy. I firmly believe that she is right. Good for Janet Yellen for saying it, but we all know they'll raise the debt ceiling because nobody wants to have that on their conscience. That said, I was going to wait until next week to close out my put positions. Hopefully there's still a little bit more trauma the remainder of the week, and we'll see things start to sell off. Boss People says October 18th is the drop dead date. I heard that we had Bill Addis in the program, and he says they will officially run out of money by October 15th. Who knows? It starts to get uglier the longer that we wait. And if you guys listen to the Monday morning must knows put out by Online Trading Academy, I outlined these 2 things for the week. Number 1 was the infrastructure bill vote, which Surprise, surprise, they couldn't agree, and they kicked the can down the road a little bit, and now it's supposed to be tomorrow, and we'll see. It might get booted again. Then you have the debt ceiling vote, which is going to be on Friday, and my guess is that will get kicked down the road too, because politicians, let's just get paid to sit here and argue about stuff and not actually get things done. So I think you'll see increased volatility this week. I have a feeling that this negativity will persist until we get some clarity with regards to infrastructure and debt ceiling. Debt ceiling to me is more important than the infrastructure bill at this point. So yeah, next week I'll be closing out those QQQs and SPY positions that I have. And the reason for that, guys, is I have the November puts. So one of the main things is I don't like to get down under 30 days to expiration if I bought puts or calls. I don't like to hold in that last 30 days till expiration. Ideally, I'd like to be out 60 days before. So I'm really buying a put or call option for that first 30 days of value unless things get pushed. So right now I've got a little bit more time. Another week's not going to hurt me on that, but it starts to decay in value significantly going into those last 30 days. All right. Yeah, Bobby, you say Republicans are blocking Dems from doing it, and then it's the Democrats who are blocking the Republicans. So, it's not one side here. It's both sides. I would say it's 50-50 dysfunctional, right? They're both being idiots in this, and I hate you because you don't like this, and I hate you because you don't like this, and we'll just sit here and argue. To me, that's the problem. It's not a Democrat thing. It's not a Republican thing. It's drama. It's BS, and I don't want to go into political discussion. I always try to toe that center line there because we can make good arguments and bad arguments for both political parties. Bottom line is I don't care. I just want to see things get done. I want to see our economy grow. I want to see what's best for America, not what's best for the politicians' pockets, which is the recurring theme that I see every administration. It's about how can they be bought, how can lobbyists come in, and how can they kind of move things in their favor. So, we're in that same edge of the cliff here, if you would, with NQs. Notice that right near the bottom. I mean, it has been bouncing along that line. I've had that lower line there at 14,768 drawn on that chart for quite some, 14,770 for quite some time. And what's nice about it is we closed right on it. We're actually just slightly below that. So, keep an eye on tomorrow. The futures in the after-hour sessions aren't really doing much, but keep an eye on it tomorrow. I have a feeling we may continue to drop down because of this fear factor. I'd be happy if it did because obviously I've got a good amount of puts on the market now. So that's the Nasdaq. Nasdaq was by far the worst, and when you look at some of the individual components, right, Facebook was down 3.66%. You look at things like Microsoft really taking it on the chin, I thought, today, down 3.62%. It just had a gap down and just sold off all day long. It really did not need to, didn't have any sort of hope in that chart at all today. You look at things like what I think is the best company in the world, Amazon, down 2.64%. You had Apple down 2.38. So Apple actually doing better than the overall Nasdaq index. Let's see, NFLX. I didn't even look at Netflix today. Down 1.48. So all in all, a lot of pain in the tech space. Google down 3.76. Ooh, that's not a bad one. Right into a demand zone too. I should have looked at some puts on Google today. So that is the worst. Now, what's noteworthy for me anyway, we talked about how there has been, for the most part, a group running. And when I say group running, look at the Nasdaq. You look at the S&P. That picture looks very similar. You look at the Dow. Dow's a little different. And then you got this bad boy here, which just doesn't make any sense, right? It looks completely different than all of them. You're the dead center of the range, right? Dead center of that range. And I think it's important, again, for anybody who's looking for those sideways type of trades, specifically anybody selling spreads or doing spread trades on options, God, this has got to be the best spread trade I've ever seen. It's been since February, almost completely sideways, and you're now in the dead center of that range. So anybody's looking to do some spread action, look at IWM as a potential. Chris, you say 30,000 Bitcoin. Yeah, I hope not, because I like Bitcoin, but just give me an opportunity to buy some more, right? I will buy some more. Naum says, is the market tapering? No, they're not, right? The Fed had talked about this. So you had multiple members of the Fed. And of course, you got to give props to Janet Yellen. She was the chairman of the Fed, so she knows what they're doing. And I assure you, she's talking to Powell and others about that. So consider her a member of the Federal Reserve at this point with her influence at the Treasury. So she's in Powell's ear going, hey, you can't default. And trust me, Powell knows he can't default because the double mandate is full employment and price stability. If they default, price stability is out the window. And no matter the amount of money they print, they won't be able to give it stability because the entire global system will look at us and go, we're not buying any American debt because you're defaulting. You can't even make payments on that. We don't want anything to do with you. So they cannot let that happen. It will not happen. Let's see. Let's see. I got a whole bunch of comments coming. You guys are very chatty today. I love it. Wouldn't a good strategy be to buy VIX below 15? It will rise eventually. Can you trade VIX like that? Yes, you can. There's VIX derivatives that you could be using. But, you said if you buy it below 15. At some point, it'll probably pop up. But you never know for how long. I mean, here, I'll put a line below 15 here, or at 15. Right? And there's VIX 15. Well, you only had, let's say, 3 days to buy below 15. And you're right. I think over time it should bounce up. But just back here, you had between 2000 and call it mid 2016 to 2018. It's a year and a half. It basically stayed down below that. I mean, it actually got into the single digits, which was awesome. I remember a lot of my guests on the program on Power Trading Radio talking about this, going, this is bizarre. Any textbook would be like, hey, that means that there's just no fear in this market whatsoever. Nobody's even thinking about a market correction or crash. And then you get these big events like 2020, which shot it all the way up to 80. I think you're probably right, Walter. You could use that as a strategy and say, my thing is I'll buy some if it gets below 15 and I'll just hold it till it moves up. Again, the problem with some of the derivatives are they're futures based. So you'll be buying like the VXX and some of these other TVIX, etc., which are like ETFs or ETPs, exchange traded products representing VIX. They're using futures markets and they roll, so it's not a one-to-one correlation to the VIX. There's some derivative there. Maybe I'll do a show on that, but it's a pretty complex topic. But yes, you could be doing that. What else do I see? How does the government run out of money when taxes are constantly flowing in and press is still going brr? Yeah, how do they run out of money? I wish I was running the budget because I know where every single cent I have is going. I make sure there is no way in any month, even with a catastrophic emergency to my personal well-being or to my house or something, that I will run at a deficit. It's imperative to me that every month I have a positive number after I take my expenses, my liabilities, and my income. And every month I have to be green. That's just the core of who I am. I don't think governments care about that, right? Governments will just look at all these different pieces. And again, there's so much to run a country. It's easy to sit there and be Monday morning quarterback and go, you guys suck at doing your job. Honestly, that's a very tough one to do. But, for me, part of it, I think, needs to go to privatization of certain aspects of government. When you have certain government agencies, there's this lackadaisical kind of attitude of, who cares? I'm going to get paid anyway. And yeah, I'll pay, you hear stories of government agencies paying like $700 for a hammer. It's like, I can go to Home Depot, which is retail, and I can get you the same hammer for $15, and you paid $700. Tell you what, I will be proactive, and I know you need hundreds of hammers. I'll go and talk to the manufacturer, and I'll get those hammers for $10 a piece, right? I don't know. I just don't think that there's a care to look at money from that aspect. You look at somebody. I'm going back and digressing here, but there was one of the guys we did a study on in college. It's not Hacksaw Jim Duggan. His name was Hacksaw Dunlap. Al Dunlap, I think, was what his name was. And he would go into corporations that were struggling. And they would bring him in, and he'd be the cleanup guy. And what he would do is, he was the kind of guy that would just run through every single number. And anybody who didn't carry their weight and have a positive cash flow in the company, out, done, beat it. I'll replace you, or I don't need you. He would also be the guy that's walking around turning off every light in the building at the end of the day and implementing simple things to cut cost. To me, that's how the government runs out of money. We just don't care. We just keep spending and spending and spending and spending. And it's not, there's no afterthought about it. I watch my spending extremely closely to the point of some people call me cheap. I call myself frugal, but I'm not going to just throw money away because I don't need to. If I can shop and find, if I can save $20 by buying an item online versus going to the store, I'm going online. I think we have to watch that kind of detail, and there's just too many pieces to watch with that kind of detail. Let's see. Do you still think if silver falls below $20, SLV would hit 18? Rob L, SLV. I'll be honest. I'm kind of torn on silver right now. I mean, you look at this chart, we're really at an interesting point where it has not been below this since June of this year. So, of last year. So it's been a year that it has not been below $20.42. So I'm a little nervous because we keep bouncing along this one. So the question for me on my silver today was, do I think it's going up or going down or staying sideways? I kind of think it's going to chop sideways on this one for a little while. So that's why I sold the 2150 call options on this, just to generate a little bit of extra income for this portfolio. The other choice I had would be to just put a stop loss down at $20.15 or something, so I don't take a big loss, because I have a pretty sizable position in SLV. But to your question here, for G, no, it wasn't GD, that was for Rob. Do you think if SLV falls below 20, SLV would hit 18? Well, look over here. What else do we have, right? You don't have much. I'm not doing zone. I'm just kind of doing an overall mark. To me, I think the likelihood of us hitting 18, if we break 20, is pretty damn good, right? You've got one little gap up, but really it's a series of gaps. And I'm a believer in silver. I know Brandon Valentine, who's usually here, he's a big metals guy, and he's all for silver. I think long-term, silver is great. I think during a recession and a market crash, silver is going to be great. But for whatever reason, it appears to slowly be falling out of grace. And I'm concerned because obviously I'm long, but I don't like what's been happening recently. It's just traversing sideways right now for the past 2 weeks, but it's on a short-term downtrend. Granted, we could look at the bigger picture, and it looks fine. But I don't know. I don't feel as confident with SLV as I do in a lot of other markets right now, just because that chop and that current downtrend. So yes, if it breaks 20, do I think it could hit 18? I would definitely think 1850 would be a logical target. Yep, right at the origin of this big double gap that we saw. So may present another buying opportunity. We'll see. Let's see. Hey, Merlin, I see demands on an SPY down around 398 to 393. What do you say? Well, let's go to the SPY and let's see. It's funny, look at all these red lines over here. First off, it's a ways away from price, right? You're talking 398, so I'll go you're talking way down here. 398 to 393. I'm just drawing it on. All right, so yes and no. Personally, that I wouldn't draw my demand zone there. I would make this tighter. So for me, I'm okay with what you've done there, but it'd be more like 396 to 393, right? I would tighten up that zone. But if you notice where we are now, right, we are currently sitting at 433 on the S&P. There's a decent demand zone, which I'd like to open up and see the lines a little better, right around 425. And Tom, I think that you sold some 425 puts, right? Or bought 425 puts. I think you told me that last week that you bought them. So good. I'm glad your puts are working for you. To me, the next logical stopping point, an area that I'd be interested in, SPY, is somewhere between 421 and 426. Yeah, granted, that's a 50-point range on the SPX, but, that's the next big one. After that, you've got a spot a little bit lower. Then it's not very clear. You have a lot of unfilled gaps that go all the way back into April of this year. So, I don't see there being a huge systemic collapse unless we default. If we default, then I will be very happy with my 55 puts on the market, because I'll be keeping those. If I hear the talk track getting worse and worse and worse, I will hold on to it. But yeah, we could see a bigger correction if that happens. I just don't see him letting it happen. So there you go, GD. What else we got? We were officially downtrend. Yep, Walter, we're officially on a daily downtrend on the NQ. So here's your NQ. There's your daily. It's about making a new low, right? So technically, I feel like we could still argue we're on an uptrend. It doesn't look good. It almost looks like a head and shoulder right now. And guys, from July all the way through mid-August, you had the left shoulder. From August 19th through September 20th, you had the head, and then you had this real quick shoulder that goes through till today. That's an inverted head and shoulders, a head and shoulders pattern, which would give me a price target should this break. All right, let me just map out what most people use for a technical measuring object. If this breaks, that means they're targeting a Nasdaq 100 price of about 13,821. That would be a decline of about 6.4%. Honestly, I don't think that's far-fetched at all. A 6.4% decline. It looks ugly, but the big picture, that's a pullback, folks. That's just it's a nice correction. It's still, once we get to like 20% off the high, where would that be? Let's see, where exactly would 20% off this high be? And that would be somewhere, so 20% is where I think you see everything bounce aggressively, and that's because that's the definition of a bear market. Once that happens and everybody has the talk track of, we're in a bear market, and then usually buying comes in, and if we get below that, then it really starts to crater. So 20% down on the Nasdaq 100 would be 14,768. So you got a long, long, long way to get to that point. I don't necessarily see us getting there unless we default. All right, what else do we have? Huge correction. Let's see. Boy, there was a lot of stuff going in here. Jimmy Garoppolo getting traded. Don't be dissing on my 49ers, pal. Yes, Walter, I totally agree. As a carpenter, there is a difference between a $15 hammer and an $80 hammer after $100. Yes, totally agree. It's funny. I was watching a home improvement show last night, and the guy is swinging literally like a 99-cent store hammer. I'm like, this is such stage BS on these home improvement shows. But yeah, I know. I've worked construction when I was younger, and there is a huge difference between a $15 hammer and a $100 hammer. But I think my point is, if I'm a vendor of hammers and I know I'm selling to Walter, hey, here's my list price. If I know I have a government contract, let me get a different list for you, and that's way more expensive. For example, if you go to like different event places and you want to rent it for, you want to rent that hall, it's one price. But if you say you're having a wedding there, it's like the price is triple the normal price. Why? Just say you're doing something else. I'm having I'm going to do a book reading party here. Who cares? I just want to rent it. But if you tell them it's for a wedding, it's like, it's for a wedding? Okay. Well, we're just going to tack on an extra $20,000 to your rental expenses. Anybody got married, you know that's true. You see the prices of some places. It's unbelievable. What else do I got? TraderMerlin for president. Tom, there's, by the way, you guys know I cannot run for president, so don't even think it would be illegal. It would be unconstitutional for me to run for president because I was born in Munich, Germany. I know I'm a crowd. It's all right. I am an American at heart, and I've lived here all my life except for the first few years. What else do we got? Balanced bike, electric bikes in every garage. It's part of, think about it. I could give everybody in America an electric bike. Instead of a $1,200 stimulus check, I could order container ships of electric bikes and give everybody in the U.S. not only an electric bike, but probably end up giving you still another $800 in cash to do whatever the heck you want with. Vote for Merlin. Vote for Merlin. Let's see. You'll buy it cheaper because you don't have a friend manufacturing hammers like they do. Yeah. And that's another part. That's where you get into the crony capitalism side of this, Lisa, whereas, the government agency, you're right, might be able to go to Home Depot and say, hey, let's buy your hammers. But like, oh, yeah, my cousin's nephew's uncle works for a hammer supply place. We'll buy them from them at a huge markup and keep their business going. I mean, look, it's one of those things that irritates me to no end. I don't know the solution for it, right? I just have to do what I can do to improve my personal financial situation. It's frustrating watching our governments work. And not just ours, it's all governments, guys. Let's see, what do we got? German? Thanks, Bobby. What, did I like beer? So it's funny, every time I go back to Germany, my cousin, she's a little bigger German girl. They're always like, you're so skinny, you need to eat, you need to drink. I gained 7 pounds in a week living in Germany. I'm not moving to Germany. It's not for me. Cool, Tom. Says my SPY puts hit their target and I'm out with a nice profit. Excellent. And you hit it in a very short period of time, so congrats to that one. Let's see, what else do we have? So, oil. All right, so let's talk about oil. So, we're almost to that point where I have to change my mind on oil. Remember, I'd had these charts up here for a while. We asked as a group, collectively, I think most of you were bullish on oil, and I was saying, look, I'm still bearish on oil because it was in this downtrend. And for those that might be new, that was when we were like, here. I was like, I'm bearish on oil, and I'm still holding it. I had some supply zones drawn. It ripped through yesterday. Now it came right up to that upper line at 76.82. You talk about forming a beautiful double top. Who knows where it's going to go from here? Again, until it closes above 76.82, I still have a downside bias because of what happened in the blue box. Of course, it's changing very rapidly, right? It looks like it's getting more and more positive here. Obviously, we smacked our head against the ceiling there on crude oil today. So, no, I don't know. I personally would stay out of it. I've been wrong for the past 2 weeks on crude oil, thinking it would be drifting down. We've had a very nice move up in crude oil. So, all in all, my thought on why this should sell off was wrong. You guys might remember my thinking, and it wasn't just my thought off a hunch. It was looking at the facts, which was we had supply increases from the Middle East and OPEC, and the potential for demand shrinking because of the Delta variant. Clearly, that's not the case. We have, demand obviously is moving up because check out the price chart. It's pushing oil higher and higher and higher. Let's see, John Dinardo. Gold, silver, and crypto all down today. Shouldn't at least one of them move up? No, not necessarily. When you have fear in the marketplace, a lot of times it will take everything with it, even though you have this historical relationship between some commodities and equity markets, etc. No, I think that you'll get days where everything goes down, right? You just look across the board and how does it all go down? It's the extraction of capital, maybe going to cash. You did see the dollar move up again today, which might reflect some of that, but where do I buy DBC? Ooh, good one. So, looking at commodities. So, DBC, I forget all the different components of it. It's a pretty diversified commodity tracking fund, so it's got a lot of different stuff in it. You look at the price chart of DBC, and I'll start off on a weekly or monthly, because I think you got to look at the big picture of where we've come from here with DBC. Now, the good news is that downtrend that's been intact since 2007, which was just much lower, it broke here about 6 months ago, right? We broke above this level right around 1850, and now it's been slowly moving up. So to ask where would you buy DBC, well, I'd have to go back to the weekly. And again, I'm thinking here, Margaret, that you're asking me about longer-term picture, right? What's the longer-term perspective? I'd be waiting for a pullback into a demand zone. Right now, if you look at the weekly, we have a shooting star formation. However, the week is not over, right? We may see this pattern change. But right now, it looks like a shooting star formation, which is good for a pullback. If we look at the daily, I don't see any great zones. I really don't see anything that makes me go, wow, that is a great zone, right? So the reason I said is this whole period from May of this year all the way through August was this weird sideways chop. It looks like it hit spots multiple times. Do I go down here to that most recent sell-off and mark off this spot right here, which is between 1810 and 1790 as that potential buy spot? I'd probably say that would be a spot for me, right, which would be about a 10% decline from current levels on DBC. That might be a little stingy. It might not get down to those levels, and that's just a risk we have to evaluate. The other option is, do I go more aggressive and I go from where this last hammer formed and move my entry orders up to this area, which is between 1932 and 1910. Those are two spots, at least on that daily, that I'd be looking at. Other than that, I'd have to go much longer term, but I don't think you'll really get that big drop, especially if we continue to see inflationary pressures prevail in the market, which I think we will. I think you'll probably see this one continue up. So maybe we get down to that 1910. I don't think you'll see this fall to 18, but you might. All right, physical silver, baby. I wish I had more physical silver. I have physical gold, but that's all I got in the long-term category. All right, let's see. Walter says short natural gas. I tell you what, you got to have some cojones of just solid brass to think about shorting natural gas. Let's go NG. I mean, it does look like it had a crazy blow off top today, right? I love it. I love that type of move. But if you're looking to short NG, there's three ways you trade something. You anticipate and you jump. You just make it because you go, I know it's going in this direction. Or you wait for confirmation. I would clearly wait for confirmation on this one. If you are looking at shorting natural gas, make sure you wait for confirmation because this thing's been so volatile lately. The line I'd be looking at, I'll move this one up, is just below the low of today. So the low on natural gas on NG today was 5.647. All right. So if we drop below that, then I think, okay, we'll probably have a pullback. But I would be careful. Leave it alone. And Bobby's right. You say winter is coming. We're not talking White Walkers and Game of Thrones. But one thing to pay attention to, and this is something that, I'm not one of those guys that looks into all the I don't really look at commitment of traders or the seasonality. That's something like John Rowland, let me make a note because I meant to call him yesterday. John Rowland, he's out there looking at all that data. And remember, I think it was last year, maybe even the year before that, John was on the program, and it was interesting because people said that same thing. He said, winter's coming, therefore natural gas should be spiking in price. And he goes, If you look at the inventory data, because obviously anybody who's using natural gas in excess, meaning the East Coast for winters, or just any city for winter, they know they need to stockpile inventories to get ready for that. And what we saw last year specifically was, I think it was last year, I'm losing track because of COVID, what we saw was a huge surge in the storage, meaning they are already maxed out their storage inventory. And that's the big difference, because if storage is already maxed out, they don't need to buy anymore. They can't really buy anymore because they got no place to put it. So something to think about is check out those inventory numbers. Not only what the inventory number is, but what's their capacity, right? Because if you have a bunch of metropolitan areas maxing out their natural gas storage, it's already peaked, how can they buy more? Right? How's that going to drive price higher? And I think that's what John was pointing out. He goes, look, people think it's going to rally. I think it's going to sell off because they've already maxed out their inventory. I can't pull over any farther. I'm already pulled over, right? Anyway, thought that was it's an interesting one. And natural gas, I think that there's just a lot of manipulation going on with natural gas right now. This has just been remember what happened with lumber? It's almost like people are looking at commodities going, how can we screw with this market, right? Here's the lumber chart, which is, this is one for the history books, guys. This is just a monumental move up, and now it's right back where it should be. Maybe a little high, but I think you'll see the same thing with natural gas. The question is, how high does it go? You have a lot of people speculating on it right now. I mean, that move just in the past 4 days, let's look at how big that move was in 4 days. Let me get the percentage gain on there for you. We'll go from the low to where we peaked out at. You were looking at a range of 34%. Are you kidding me? 34% move in natural gas in 5 days. 4 days. All right, that's a tremendous move. So I don't know. I personally think it's been a little bit manipulated, a little overextended. I'd be careful with that one. I personally won't be shorting it. I don't like juggling chainsaws. Did I ever tell you guys the analogy I have with juggling chainsaws? No. If I have, let me know. If not, let me know and I'll tell you. It's a funny one. Is PFE safe in a hammer formation, and is a gap down with that formation good? So let's go PFE. So, great. This is one of those setups that I usually like a lot, all right? I like hammer formations, and that's what you have here. You guys can see it on Pfizer. You got a pretty big pullback from $52 all the way down to 43, so it's been a pretty, 20% slide for it. And if we look at the zone, all right, you can map the zone out from a lot of different spots, but let's just say it's right. That's where I would draw this zone. So you did tiptoe below it. That's okay. All right, that's okay. But for me to trade this, you know the way I trade hammers, right? I would want to put a horizontal line right across the top of that, which would be right around, it looks to be about 43.12. So if we open up somewhere tomorrow down below 43.12 and then rock up here, then I would say go for it. The only thing I want to see here is volume. So you have higher than average. It looks slightly higher volume. Nothing gigantic, but if you have this pattern with a super high spike of volume, then it's one of my favorites. All right. If volume was up to like here, I'd feel like Gollum in Lord of the Rings, rubbing my hands together going, my precious, yes, Smeagol-like. All right. I know. Don't worry. It's iced tea in my Chick-fil-A cup today. No whiskey, even though it's my last show for the week. Sorry, guys. All right, so the juggling chainsaw story, I guess I didn't tell it. So, when I lived in Europe, I was fortunate to have the opportunity to go visit Barcelona and just travel around. I was paid to travel around. And there's a place called Las Ramblas in Barcelona, which if you ever go, it's a tourist trap, but just go. You see some amazingly talented people. And when I started off, I had this different mindset about trading and investing than I do today. I am much, much more risk averse. So here's the analogy. If you walk down Las Ramblas, you'll see somebody out there and he's got, 3 tennis balls and he's juggling great. He's like, he's flipping them under his elbow and you're like, great. You flip the guy a euro, you're like, okay, cool, you juggled some tennis balls, you're awesome. But then you go down and you see, a little bit further down, there's some guy and he's got these 3 Husqvarna chainsaws, and there's smoke billowing out of him, and he's blah, 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 he's got 3 of them. You're like, holy shnikes, are you kidding me? You leave the guy 10 euros. Well, why are you leaving him 10 euros? Because you come back in 6 months and the guy is now doing a marionette show and he's got 1 arm. It's like, hey, how's that juggling going? You're like, oh, well, I missed one, Trading risky assets like natural gas right now, or even some of these cryptocurrencies, it takes 1 trade to completely wipe out your career. And early on, in 98, 99, I look back at some of the stupid crap I did, and I'm like, how did I make it? I don't know how I made it through till today. And then you start to realize that it's all about risk management. It's all about paying attention to the downside. Forget about making money. My attitude is making money is a byproduct of not losing it. If you focus on discipline and risk management, you won't lose big. And that's the key, because if you lose all your money, you're not around to make it back. You got no cash left, right? You're borrowing from relatives, and that's just even worse. So it's all about losses. Losses is the only thing that matter to me in trading. So when you look at, these pattern formations like this on Pfizer, I look at Pfizer and I'm thinking it's had a pretty big sell-off. It's also had a huge run, by the way. Let's call that out too. I mean, here's the chart of Pfizer. I zoom out a little bit. You go back into March of 2020, this thing was trading at $26, hit 52. So you have a 100% gain, not too shabby. And now you got a substantial pullback. I don't think Pfizer's going away. I mean, I don't think their COVID booster shots are going away. I think that, drug companies are going to continue to do well. So I'm okay with this one. But again, if you do decide to trade this hammer formation and it does continue to drift down, you got to pull the plug and be able to get out. This one I like. I like this setup because to me I have kind of defined risk here and I can see the overall picture, right? Believable direction says so. Go long Pfizer if above 43.12. Yeah, that would be my plan. If it opens below 43.12, right? If it gaps up tomorrow and runs, I don't jump on it. I don't chase. But I want it to open up down in the yellow box or anywhere below this blue line, confirm to me that the buyers are in fact there, and then push it back up above it, and then I might start building a bigger position in it, right? That motorcycle jumper died within the last few months. Yeah. I mean, look, that's why these daredevils get paid a lot of money, right? I'm not doing anything where I'm going to, risk my personal life, knock on wood, or my financial life. I mean, it's kind of funny. I broke my first bone. And it took me 48 years to break a bone in my body. First bone I broke, literally, I think it was like 2 months ago. I broke a bone in my body. I broke my pinky toe. First time ever. And you think, how the hell does someone go through 48 years of life and not break a bone? Well, because I'm usually very careful. I'm always like watching things out. I don't take on too much risk. I still live a great, full, fun life. I do all kinds of fun stuff, but I'm just not going to push myself. And that's my personal life. And also, it's my trading life as well, where you just don't take those kind of risks, because I hope that I'm in the retirement home at 95 years old. And I'm the one that all the ladies like, what you doing over there, Merlin? Well, let me put your teeth back in and I'll tell you what we're doing. We're trading, because I'm going to be doing this until the day that I die. All right. Yes, definitely believable direction. Confirm the direction. Confirm it. Make sure it's going in your direction. Because right now, if you look at that price chart, what are you doing? You are literally Gandalf standing in front of the avalanche going, you shall not pass, right? It's a landslide for Pfizer right now, but that little glimmer of hope is the hammer formation today, kind of in a demand zone a little bit, but you can't expect that your willpower or your thoughts going to stop a stock or a market or a future or crypto. You just have to look at the price charts and say, this looks good. I have a higher probability because of these 1, 2, 3, 4, 5 factors. If I'm wrong, cool, no problem. I'm out. Yeah. 56 years, even with some risk. All right, believable. I'm going to come over with a hammer and break a kneecap just so I can say you broke a bone. You can't outdo me, man. 56, that's impressive. It seems like everybody I know has broken some bone somewhere. All right, let's see. I did not look because I'm going to be traveling tomorrow, so I haven't even looked at economic announcements or earnings calendars. There really wasn't much happening anyway. I know that we have the vote on Friday, which to me is the most important piece. Today you had Powell speak. You did have some consumer confidence numbers, but those are not that important. You remember we had the discussion on housing. I did not think we would see the numbers beat 20.1% was the year-over-year growth for the Case-Shiller Composite 20 Home Price Index. It actually came out at 19.9, so a pretty Still a very robust number for housing markets, even though it's slightly lower than expected. Tomorrow, you've got a lot of central bankers speaking from Japan, the US, the UK, talking about their financial markets. That could give us some global sense as far as inflation and growth numbers. Tomorrow, you also have crude oil inventories coming out. Remember, we just smacked our heads double topped, if you will, into an overhead supply level on crude oil. Boom, there's your double top right into overhead supply. Inventory numbers come out tomorrow, so maybe this is just a little bit of leaking of data. I don't know. I'm not going to mess with that one myself because, again, I'm going to be traveling tomorrow. And that's pretty much it. There's actually a lot of stuff happening, so check your earnings calendar and economic calendar for stuff that's happening out there tomorrow. All right, let's see if I got any last-minute questions coming through. You've never had Chick-fil-A? Probably because you always go on a Sunday because you work all the time. It's pretty damn good, I have to say. I'm a chicken nugget guy, so I love their chicken nuggets. And honestly, I don't try not to drink sodas, so I drink iced tea. Iced tea is pretty good. Boss Poop is 60 and only a mashed pinky from a drag bunt. I'm hoping that's... Boss Poop, I'm hoping that's from softball or baseball, or maybe you're a drag guy. To each their own. Let me know where the drag show is. I'll support your habits. No, Margaret, unfortunately, I got to. I'm going to Atlanta. I'm flying out to Atlanta tomorrow. I get to see Kevin Green and Mary Beth Motisi. Kevin Green actually it's one of his claim to fame. He's got many. Is he was actually a online trading academy student before I was. I think he came on several months before me. So he actually has more tenured OTA than me, which is crazy because I feel like I've been there forever. But to be Larry Jacobson, Todd Davis, and myself doing a presentation on multiple asset classes. So we're talking options and futures, cryptocurrencies, of course, and Forex as well. So it's going to be a fun event. They asked me to fly in. I thought, you know what? Let's get myself on an airplane and get past that crazy anxiety thing and see if we can have some fun in Atlanta. So I'll be out in Atlanta until Saturday. So unfortunately, that means I won't be able to do this show. I might in kind of if I really get lucky, but I think I'm going to be involved with all these different presentations going on and going out with the team and stuff like that. So remainder of the week, guys, no show. I know. I'm sorry. I know many of you. Are regulars and want the show every day. Trust me, I like it too. I have friends who give me a hard time. You do that show every day for free? Yeah, I enjoy it. It's fun. All right, yes, the East Coast tour begins. So that's going to do it for me, everybody. I hope that you enjoyed today's show. Be careful the remainder of the week. I think you're going to get some extreme volatility. Today, I think, was just a start. I think you'll probably see not just down big moves, but also big up moves. I think it's just going to be very volatile and jiggy based off of political theater. And that's nothing out of the ordinary. It's just elevated this week because of this culmination of multiple factors from the infrastructure bill to the debt ceiling vote, and also, senators calling out Jerome Powell and the Fed for insider trading, etc. It's like, hi, pot calling the kettle black. Come on, Elizabeth Warren. Senators are insider trading too. Yeah. All right, guys, that'll do it for me. Again, if you like today's show, you can give me a thumbs up. If you're new, hit that subscribe button. You can also send me in comments and questions. I know there were 2 questions I did not get a chance to get to. I will get to those as soon as I can. TraderMerlin@gmail.com is how you can send me those comments and questions. Until then, happy trading, everybody. I will still see my Crypto Investor Live group. I will be doing that tonight and Thursday morning from Atlanta. So we'll see you guys in the CIL program. If not, I will see you guys on Monday. Have a fantastic remainder of your week. Be safe. I'll see you Monday. Take care, everybody.